Hello, friends. This is Avi from ZestStockMirror, and we are just going over the market. So today is August 25, 2024. We are approaching the third week. August started with a lot of zigzag, a big sell-off in the first week, and second week, half of it, and then it pulled back up. So there was a big move from the volatility standpoint. So let's see now that index is back to its topmost position where the market is going. So from the earnings standpoint, we have major earnings like NVDA is there this week. And then other than that, let's take a look. What are the major earnings? So we have Box this week, then Okta, CHWY, NVIDIA is a major one. Then we have HP, Five Below, Viva, all is Best Buy, Dell, Alta is there, Gap is there. Then there are certain 3D systems. So overall a mix, not the greatest earning week, but it is NVIDIA is going to be important from the market standpoint. And let's see from the out of earnings side, we are looking for some information from Atlanta Fed Chair for coming week, and also there'll be some information on the Thursday where we'll be getting the initial jobless number. So unemployment number will be coming, and then we'll be looking certain information on the GDP and pending home sales. So I don't expect any major moves because of this, but still, I mean, this is what it is right now. And from the let's quickly take a look into a couple of stocks from the earnings standpoint, and then we'll look into the stocks that our partners or our clients have asked through our channels. So quickly we'll go over certain earnings, especially let's go to one of them is CHWY, which has earning this week. CHWY has been going sideways with a move up and then move down and little pullback. The stock has upside potential right now. All I'm looking at is the trigger breakout. So for now, this is they're good in quarterly. Their income is going good, so it looks like a positive stock as of now, and this looks good overall. CHWY is a good investment to look into. Quarterlies are better, so I think it's a good to add on. Now let's go for the earnings. Will give you some more information, and that Roaring Kitty is back, so that's also giving strength to CHWY investors. So to CHWY investors. Now let's go to the next one. The major power player is NVIDIA. It's okay. So let's say NVIDIA is 129. At a move up, NVIDIA is close to about 181% from the year start of the year. It was close to about roughly $47 now, $129. So the after split, and the earnings is going to be very, very important right now. So personally, I think number-wise, there's no question that the stock has been doing extremely good. Especially the income numbers are great, and net income also has jumped up quite a bit. So a lot of orders. The earning will be important. Any weakness or anything like that, or it will continue to rip up. So we'll come to know on that. So that is nothing. On the cash flow side, let's say their quarterly cash flow is up $1 billion here. Maybe the number of orders that they're getting is interesting. The cash flows as of now is not looking, there is a good amount of net income, and free cash flow is there's almost triple time, so about $12 billion in the free cash flow for the company. So as of now, I think it's okay to continue to be bullish, but earnings will be very important. Okay. Now, other than that, we'll quickly look into, let's say, we have calls. Let's take a look into coals. Okay, and coals has been going sideways. Their drag on the inflation numbers and all are probably causing them and the lower sales. So right now, I would just say to be watchful buying coals. It's going to be yeah, it's the highest is 28 and then it's going sideways, way sideways. So just be watchful, nothing to do here. Now the next one I'm looking at is, let's see, Salesforce. Let's take a look into CRM. We have CRM, and CRM earnings is it's done quite. There was a drop 271, 285 to 271, 264. So one of the reasons Salesforce is going sideways is because there is a stress on the balance sheet for the companies so it's impacting the new clientele and the expansion model. So companies are very speculative, but as of now we'll continue to see what the earnings are. Their earnings they're holding tight, so this will be until July. So will give us some head start. I'm personally I'm moderately bullish on Salesforce. I think it has still good upside. Okay, now other than this, we'll quickly take a look what else. Um, um, Best Buy. Let's take a look into Best Buy, and then Best Buy is doing good actually. They have done better than the other retails. So uh, their partnerships have helped them a lot, and reducing their cost structure has been great. Their quarterly statements are nice overall. So they have been doing good sales. Balance sheet wise, their revenue and everything. Yeah, nothing specific, nothing surprising. I think I am kind of like, just it's a mixed bag. I'm not going to be um, from what I looks like, this is okay to buy, but I will try to reduce my position. But at least it's it's sideways, and I earnings will be a new picture. Until earning, I'm not going to be either bullish or bearish on Best Buy. So I'll just see what else we have. Lululemon, and one last we will do was let's say AFRM and Lululemon. So AFRM is um, going down. It's been trending down for a while, and it's one of the stocks which had rallied up and now it's gone down quite a bit. So it was 2021 and it's close to 162. Now it's $31. So their earnings are doing good. I like the stock overall as long as they keep their balance sheet in a good shape. So I think this still looks, there's a differential of about $3 billion per quarter. So it's and then I feel the cash flow is 2023 was negative, but then the net positive cash flow March 2024 has been positive. So I'll see. Right now, I think AFRM is a good to add on, but it may not be a quick trigger point. But okay, all right. And then last one from the earnings will look is Lululemon. This is going negative, had a good jump till $500 at one point in 2024 starting, and now it's gone half of it, so about 50% from the YTD. As of now, I think this is a stock which has upside potential, but it's being a retail. This has a lot of downside movement. So as of now, just I'll hold it tight with your stop losses or your directional moves to be changed in case something moves down further. So for now, I think Lululemon is a hold. It's not a buy. It's not a sell. All right, then we can go to our clients' stocks that we want to be reviewed. We want to do Clover. It's been one of the stock that has been. It was started in our tips, and now the stock was down for a while, and so recently had taken a run. So let's see what's going on with Clover. Now this stock for a month has gone all the way from 167 to about 3.34. So that's about 103%. Anybody holding is good. Congratulations. Okay, now from the overall earnings point of view, their earnings has been one of the main factors was that their net income, which was negative so far, has become positive. So their cash and also their I'm pretty positive their cash position has improved, which is the net income itself, which is a major change and is making the stock to turn up completely rebringing the life in the stock. Okay. The balance sheet is again nothing specific, nothing great. So I like the cash flow and the net income, the most important factor. The company has rejuvenated itself. As of now, from the stock sign point, let's say we had $12, highest was $14. The stock has moved like, okay, we'll see. I think the stock has upside near $4 to $5. And then we will see some weakness, but 3.5 tend to be a good resistance. So just be wary of that. In case there's any weakness, just start to take some profit. But for now, the stock looks bullish. Just keep it tight. Nothing to worry as of now. Just keep a watch. All right, now let's go to Clover. Looks good. Now MongoDB, MDB. MongoDB is let's see, been negative, a little bit sideways. I think the support line is near 230, 225 to 230, 247 average, and then 5-year. The highest point is close to $400, $500. So okay, for now, I think I am going to be moderately bullish on this. And I'm a little bit worried by the net income is still negative. Okay. The revenue is good, positive, but why the net is still low? The revenue has increased a lot, so this positively probably the company would be able to do something which will generate them the positive income. And let's see on their cash flow. The cash flow turned positive, so I like that. MongoDB has some positivity, especially being down by 50% from YTD and a year before. So I think I like MongoDB. Overall free cash flow to 40 million for a company which is roughly about 1.18 million average volume. And if you see, this company is, let's see. Okay, so I mean, from what it looks like, MongoDB is moderate buy, and just be cautious on this on any major downshift. But other than that, MongoDB is positive. MU being similar in the semiconductor side, the stock has not performed as good as it was like other semiconductor stocks. So something is going differently here. According to me, right now, this probably is uh, I think one thing I really feel that 1 year is, I understand, went a little bit up, but on the 5-year chart, this stock, which was close to $40, is now almost higher, and close to highest point was 140. So I'm positive that the stock can still do, and then the 7.95 earlier, it's too low. So I think for now let's see. So then net income is good. Um, Balance sheet is uh, okay, no complaints. It's okay, nothing, no major issues. Cash flow has been negative. So Micron cash flow has quarterly cash flow has been negative, which is kind of a little bit worrisome for me. And their net cash flow is also a little positive, so which is okay on the annual side. So, but it's going down on a regular basis. So for now, I'll say Micron is, unless they come up with some major net income increase or some major orders, I'll say just hold on tight. Do not buy a lot of MU. Just $100 will be a test, kind of. If it breaks $100, then we have some other issues to worry about. But for now, I think $100, if it comes as a bounce up, or it goes below. So we'll see. For now, MU is a hold and watch. Now the next thing is IWM. Let's see. I'm positive in IWM because automatically when the interest starts going to go down, IWM specifically will outperform other stocks comparatively, because their performance overall is more on the credit, which they are finding it difficult to get at a higher expense. So for now, I think I am positive on this, on Russell for 2024, remaining 2024, and even little bit part of 2025. Yeah, Russell has been going sideways for a very long time, all the way from 2021. The highest was to 31, still below to 31. So right now it's going very, very sideways. Nothing, no action, no major action. So I'll suggest just hang tight, and it's a little bit bullish time for Russell. Now let's see what else. The next one is TLT. TLT is, it's going down slowly, and 1 year is about to purely sideways. And this is a 20-year treasury bond, and the bond rates are going down slowly because um, because the yields are high. So the price of the bond itself will be lowering down, because people are um, like a lot of demand. So the supply wise, when the demand is high, the prices generally tend to go lower. So for now, once the rates start to go down, I'm expecting the prices to improve, but it also follows S&P 500, but in this case it is not. In the normal market, I have seen it following S&P 500, but because of the skewness in the rates, the bond have gone is working way differently. Okay. Um, it went up, then went sideways, more negative because of the rates. And yeah, so it's underperforming the index big time. So instead of, if you really want to make some more predictable results, instead of buying into TLT, look to buy into indexes. Okay. So that is my thought process. More predictability there. Okay. Then we have Mara. Mara is one of the digital holdings. So it's going sideways, nothing specific, just been a little bit way range bound for a year. 5-year wise, it's again nowhere close to the all-time high. So for now, I'll just say, Mara, I think I want to hold in this stock or buy it lower and then sell it. Anything which comes as a range bound, you do not hold forever. You just, when it goes to the higher side on the channel, you sell some, take some cash and look to reinvest somewhere else. So, okay. As of now, um, I will think that um, the digital assets is may have more upside. I don't know, but at least I can see the stress they have on the top side. Okay, so for now, I like, if you see the annual, the net revenue has gone down just from the fundamental side. I see 2023 is okay, but annual the net revenue has gone down. The revenue itself has gone down, so the net income has gone down. Now cash flow, nothing specific cash from financing. It's not great thing. Free cash flow has gone up. I'll need to see, did they sell something out of or lean up themselves? So we'll take a look. For now, I think Mara is just a hold. Do not buy a new position into Mara. The last one is GE. And then we have one last, which is ADMA. So we'll take a look. So GE has been doing really good performance. It's one of the stocks that 2024 has been very good for the stock. So January 1 all the way from 103, it's been, and then going sideways, hoverish. It's still looking bullish. I don't have no reason to be doing anything otherwise for now. We'll just say, okay, all the way from $48 to, we have close to 300% return in G. So anybody has making like 2 to 3 times of their entire money. This is good. It's a good stock. I need to take a look into what's going on in the macro factor for the landscape on the competition side, but looks very positive. It's good to hold G, and their earnings yield is not that's okay. 0.65% dividend yield is okay. Okay. They have been positive in net income, which is great. Balance sheet wise, their balance sheet is nothing different. Cash flow is just started to go up, but there's maybe some organizational things which I may not be aware. But yeah, so I personally, I think G is a hold. Be very cautious, but overall, it is in the bullish trend, so it might go up a little bit more. Okay, now the next is ADMA. This stock I have not. It's our tips position. Some of my clients have made a lot of money in this, which is good. Really, this stock has came all the way from below $1. At one point, it was much lower. I mean, we are talking about $1, close to $1 to its. The performance is about 300% from a very cheap stock buying position. From a small amount of your money, you can make a lot of money out of this. So their income has gone really up, and then the balance, their assets have gone down. Great, liabilities lower. So I like their overall, and the cash flow has also gone up. So there's no reason the stock could go up further. Just take a look from any other headwinds, which could be something related to the medical related news, or it could be, but as of now, ADMA looks bullish. You can continue to hold. The next level in case of ADMA will be close to, it's almost close to the all-time high. So just keep a watch, hedge it down, and see what happens. All right. So it was great talking. We will meet again sometime mid of the week and see how the market helps us and make money. Let's all make money. Any questions, feel free to message me to ZestStockMirror on the X account, Instagram, Facebook, YouTube channel. We have things will be uploaded on the YouTube, so Feel free to follow any questions, and then you can message me on the LinkedIn. Okay, from here, signing off, your friend, your dost, Avi, from ZestStockMirror. See you until next time. Thank you.